As we all know, it's a very important topic, the coronavirus and also the impacts of the real estate market. So I think before I even step into this subject, I just want to do a disclaimer. Everything I say is just purely from my own analysis, what I see and what I have discovered and what I also anticipate. And also all these things can only happen because of the research done from the past. Okay, so these are based on past experience. Based on what? Past experience. It doesn't determine the future. But I think even the governments, they have to take lessons from the past to anticipate what's going to happen. Okay, so this is an important subject, and I think it's important for you to take notes if you need. If you want to speak to clients, you want to convert them, you want to explain to them, it's time for you to do so. So what are the impacts on the real estate market? So first and foremost, we need to know what is the impact of the coronavirus first. Okay, so how deadly is the coronavirus as of today? Okay, basically, why is it so dangerous is because there's very limited medication to it at the moment. Okay, so very limited. So what is the, how deadly is it? So based on statistics, okay, this is going to show you today, based on this morning, I've checked, this is worldwide cases. We have 40 over 1,000 based on what their countries have declared. Okay, so this is all what we see in the news. And the deaths of 900 over people with a fatality rate of 2.2%. So what is important now? Our governments are monitoring a few statistics. First, how fast it spreads. Okay, how fast it spreads. Second, how deadly is it? So these are the two very important indicators that the government is watching every single day. Okay, so how fast it spreads and also what is the fatality rate. So this is an article from Business Time. I almost must say the source. Okay, based on 31st of January, which is just 10 days ago, it was actually 11,000. Okay, of course today they say it's 40,000. But all these kind of statistics, you have to take it as a pinch of salt. Why? We do not know how fast their countries release information. Maybe it's already there, but they haven't declared yet. Okay, so we are still at a very, very premature stage on how fast it actually spread. Maybe it's less than that, maybe it's more than that, we don't know. Okay, but we are monitoring very, very closely, on how fast it's going to spread. But based on statistics, seems that it's fast. Okay, based on statistics, it's fast. But also you have to compare. Okay, what happened that was actually impacted Singapore was in year 2002 to around 2003, which is this epidemic called what? SARS. Okay, so that was one of the major impacts in Singapore. That was 2003. That was 17 years ago. Okay, how old were we then? Very young, 17 years ago. Maybe we didn't we don't have kids yet. We are not married yet, so probably it didn't really bother us. But today things are different. Now look at the death rate for SARS. So in the world, there are 8,000 cases with 700 over death, which means the death rate is approximately, how many percent? 10%, right? Approximately 10%. So out of 10, 1 will be the fatality rate. So it's considered pretty much on the slightly higher side. So that's why SARS had an impact in Singapore and in Asia itself. Okay, that was around 10%. Then, Singaporeans also, what we call very 健忘, forgetful. In 2009, there was also an epidemic, which is also DORSCON orange. 2009. You all can remember or not? H1N1 virus. Okay, H1N1 virus in 2009 has affected 700 million people worldwide. H1N1. Okay, but of course, it has a low death rate, but it's still very significant. It's 200 over 1,000 deaths based on a 0.2% death rate. Okay, so that was what happened in 2009. And can you all even remember? Cannot remember, right? So Singaporeans very fast, they forget. They remember very early and they will forget very fast. Okay, so DORSCON orange only happened when? When did it happen? Friday. So now it's like 3 days. Definitely we still remember. If you all forget, I think you are good. 3 days ago, definitely today, it's an impact to us. Okay, so moving forward, okay, there are also other viruses, but I think it doesn't really affect Asia. So if you look at the fatality rate, this virus today is approximately 2.2% worldwide based on what is reported. So you can see the seriousness of it. If it hits 10%, then we're going to look at something different. Okay, but of course, we have surpassed H1N1's period of 0.2%. So this is how you know and anticipate the seriousness of where this thing is heading. Clear so far? So you have to be prepared for what is coming ahead. You can also see previously things like, for example, Ebola. This was in Africa. You take a look at the death rates. They were like, how many percent? 40%. But at the different times, there were different medical facilities. There are different medications. Okay, for this era, and especially in Africa, they don't have such medical supplies. Okay, so medical is also very important to actually help lower this fatality rate. Okay, so H1N1 actually got vaccines to it. So I'm going to touch a little bit on that. Okay, so take note, okay, what the government is monitoring is the fatality rate. Now, 2003 SARS period, for those, most of you have not experienced it. Based on research, it was only discovered, okay, in December 2002 overseas, okay, in Hong Kong. And in Singapore, it only started around February. And how long did it last? February, March, April, May, June. Approximately 5 months. By July, everything resumed back to normal already. That was just that 5-6 months in 2003. Okay, it was an impact then. 6 months of impact. So what happened during the 2003? Okay, there was 238 cases of SARS. 238. Today, what is the corona? How many? 43. So you must understand where are we. And the death rate then was 33 fatality, which brings the fatality rate to around 14% in Singapore. This is in Singapore. How many deaths do we have in corona as of today? 0. As of now, 0. Hopefully it stays this way. It's still 0. And what was the impact of SARS then? Okay, mainly, these were the things that were affected. Okay, in 2003, visitor arrivals were affected, dropping by 67%. So you see a lot of tourists and a lot of people into Singapore has dropped by 67%. Okay, and major markets registered double-digit falls. Japan dropped 75%, Malaysia 72%, China 64%, Indonesia 61%. So these are all visitor arrivals. Okay, and the outbreak of SARS has resulted in cancellation and postponing of a number of cruise ship calls, cruise ships, tourism, conventions, exhibitions. Okay, so this was a big hit for visitors then. Okay, similarly, I think today Singapore has actually put in a lot of measures, right? They actually stop, people from coming in at a very, very early stage. You can see during SARS, just let you know, the government wasn't prepared, and no one was prepared. Okay, it came as a shock. Okay, but this time round, for this particular virus, we already anticipated what's going to happen. Okay, and they already taken precaution very early. Like example, DORSCON orange. With people affected, 30 over to 40, they already call it orange already. But by right, they just want to make it early so that every one of us has the top of awareness to actually prevent more from happening. So visitor arrivals dropped. So what did it affect? It affected hotel occupancy. So the average hotel occupancy rate had fallen to 20 to 30% in April. 20 to 30% means what? Only 20 to 30% are filled. It dropped by 70 to 80%. That's the meaning of occupancy rate. That means only 20% of people are staying in hotels only. By right, Singapore hotels are today around 90%. So hotels are seriously affected during the SARS period. Okay? Even non-SARS period, their occupancy rate that time was like 75 to around 74%. So hotels reported occupancy rates, some even as low as 10%. Okay, so hotel business are very much affected. Okay, where you can spot opportunities depends on how you look at it. Okay, so this is just things that happened in the past. And this was the hotel's occupancy rate chart. You can take a look. What happened in 2003? The occupancy rate for hotels dropped, and then what happened after that? Within how many months? February, April, May, 3 months, it came back to the same again. So it took how many months? 3 months. Okay, this is what affected hotels. Okay, so our DORSCON is only 3 days. Okay, so you need to anticipate and to see what's going to happen. So hotel rates will be all-time low. So really, if you need a villa, it's a very good time to book. Maybe 90% off. Really, 90% off already. So this happened in 2003. And what are the other things that were affected? Okay, retail sales was affected. It has fallen 10 to 50% for retail. Okay, so retail has been affected by 10 to 50%. So for those who are in the retail market, there was a very sharp drop, especially for the human traffic. So all your landlords or tenants today at this kind of retails, they might be in anticipation for this. So you might have people looking to break lease. Okay, you might have people looking to have handovers, assignments. So please be prepared for all this. So tenants will be very much affected by this. Revenues at restaurants have drawn and dropped down by as much as 50%. Okay, so restaurants have also been very much affected. Especially shopping areas, Orchard. Now you want to go shopping, nobody wants. Okay, because why? It affects retail. But something very surprisingly, so sales of discretionary items, example, apparel also suffered, whereas, it's not very interesting, whereas basic necessity like food are holding out. So that time there wasn't this panic also. During that time in SARS, there wasn't this panic at the NTUC or Sheng Siong like what is happening today. Okay, during that time there wasn't this panic. Okay, so all these are what was happening. And of course, travel, okay, affected by 70%. So they have cancelled all their, NATAS fair and everything, if you have noticed. So 70% travel has been affected. But don't go too far, later cannot come back. Later you go there, then they don't let you come back. They've been quarantined there for 1 month. Okay, so 70%. And those are, of course, in the transportation business like taxis and Grabs, their income actually dropped by quite a fair bit, 20 to 30% during that. Average bookings, people just don't go out already, 28,000 to around 18,000 for 1 or 2 months. 1 month after that, it recovered. So you can see the recovery is actually very fast. Okay, so this is what happened in the stock market. Just to share with you, this red portion is all the SARS cases discovered. Okay, all these red portions were all when SARS was discovered. And how did it affect the stock market then? At the exact same period, stock markets around the world has dropped probably by between 5 to 20%. Okay, stock market from January to around when? I think this part they start to recover already. March. January to March. How many months? Around 2 to 3 months only. Okay, so these are windows of opportunities for you to take a look. 2 months to 3 months, things start to recover. And it's only through this crisis that there will be opportunities. All these years are very smooth sailing, true or not? Very, very smooth. Very smooth means slow, moderate growth. Moderate growth every year, 2-3%, 2-3%. Okay, when these kind of things happen, I'm going to show you later where are the opportunities. Okay, so this is what happened when you spot, I'm going to do one back. When you spot cases, when there's a lot of cases being spotted, the stock market will be hit. People are getting more and more educated, true or not? They know, they also know all this, so they are willing to hold out longer. Okay, people are getting more and more educated. Okay, so this is a chart to combine the how stock markets fare versus the cases. Okay, so you can see when there's a spike of cases, it will affect the stock market, but it doesn't affect them very long. Okay, this is all about mood, M-O-O-D, mood. Because usually your clients would have monies in the stock market. So every day they're watching, wow, 行情后,行情派 is all from here only. Okay, when they make money from stock market, they feel confident. They don't make money, they lose confidence. So this is something very important for you to know. The stock market probably lasted down for around 2 months, right? March to around April. 2 months only. 2 months window for you to spot opportunity, okay? 2 months only. Then of course you want to know what happened to the property market. Okay, we have been through certain crises. This is a 20-year chart. Just to show you, during the dot-com bubble, we had 15 quarters of decline. 15 quarters means how long? How many years? Around 4 years, plus minus 3 to 4 years. Dot-com. Dot-com means what? Bubbles burst, businesses go down, people get unemployed. And then this decline affected real estate for around up to 19.6%. Okay, SARS, how many quarters? 2 quarters only. Okay, by right, it's only 3 months only, but the impact of it is 2 quarters. 2 quarters. And then after that, nothing much happened until the global financial crisis, which hits. Why we always educate agents to close their deal at midnight. Don't wait until tomorrow morning, 8 a.m. Okay? This gave me very, very significant impact because I was in the market. Imagine I closed a deal, I remember, Blossomville, 1.3 million, closed already. Very happy. Meet the owner tomorrow to sign option to purchase. Yeah, confirm already. Took the check already. Okay, but I can. So tomorrow go and sign option to purchase. I sleep, I wake up, Lehman Brothers collapse. Buyer already message to draw out already. Just overnight only. So that's why I say when you close deals, especially in today's market, if you can close it the day itself, if you can do it the day itself, do it the day itself. Don't wait until the next day. Past midnight or don't want. Okay, everything, even if it's 11:30 p.m., please go for the deal. Okay, don't wait until the next morning. Okay, so impacted very hard. It dropped for how many quarters? 4 quarters. Means how many years? 1 year. Okay, property prices were affected by approximately 24.9%, which is very significant, right now. The crisis was 24%. After it recovered, and then up to 2013, government said, wow, tahan. This one, the property market going up too fast already, right? So property market is doing very well. They came up with 9 cooling measures. How many? 9 measures after measures after measures. I believe most of you already in the market. Heartbeat fast or not? Wow, every time, I remember I was having a dinner at a restaurant at 6 p.m. Then suddenly, 6:30 there's news. Wow, we cannot eat dinner already. Must be at show flat. I think there was one night, the whole show flat in Singapore was flooded with agent, right? When was that? There was a change in one policy. Which one? Is it the LTV? The 3 to 4% stamp duties, right? Wow, you see agents wear shorts, go down and close deal at show flat. Ladies all no makeup one, right? You all laugh. Really, close until morning 6 a.m. 6 a.m. So we must always be prepared what's happening. So 9 rounds of cooling measure, but it only brought the real estate market down by 11.6% over 15 quarters. Okay, why do I pull this out? I just want to show you the impact or possible impact on where this current situation is going. So let me zoom into this part, which is year 2003. So I zoom in a bit. So what happened in that particular 2 quarters? SARS was actually only 2 quarters. Okay, from February to around June to July. 4-5 months plus minus. But there were lingering effects from these 2 quarters plus another 3 quarters, total 5 quarters, property prices drop by how many percent? How many percent? 2.3%. Okay? 2 quarters of epidemic, 3 quarters of people trying to recover, because there's always a recovery period. We are not sure where this coronavirus will be. If it's 2 quarters, there will be 3 quarters of recovery. If it's 6 quarters, how many quarters of recovery you think? Humans are the same. Recovery approximately 3 quarters. The recovery. Human psychology is like that. So what we're trying to say is that based on what is going to happen, whenever the epidemic ends, it will take probably 2 to 3 quarters for things to recover strong. Okay, and this is the real bottom of the bottom. If you want to get the bottom, right, a lot of investors want the bottom, that is where you have to enter the market really. Okay, so 2 quarters of epidemic, 3 quarters of recovery, which makes it total of 5 quarters of decline to 2.3%. This is the lowest point for the past 20 years, that time. Okay, this was at its lowest point. So from here, what does it mean? For us, we are not very keen about price. Price drop up, down, I think 2% is not very significant. True or not? It's not very significant. What is significant to us is this. In 2013 first quarter, where SARS was discovered, there was a knee-jerk reaction. You know what's knee-jerk? Like that lah. You all go and buy all your toilet paper, right? It's called a knee-jerk reaction. You see doctor, they knock the knee, right? Then your leg will kick. This is a natural response by our body, right? Whenever there's an epidemic, those gone orange, we have a knee-jerk reaction. Okay, so all markets will have a knee-jerk reaction. Very natural, okay, it's natural. So with the knee-jerk reaction, transaction volume fell by 40.8%. Means if you are closing 10 deals, you'll be closing like 6 deals instead. So transactions drop, but there's still transactions, true. There's still transactions out there. Then today, I believe some of you are facing postpone of appointments, cancellations also have. Not to worry, these are all knee-jerk reactions. We just have to understand how psychology goes, okay? So with the knee-jerk reaction, transactions drop for 1 quarter, January to March. Then after that, it went up by how many percent? 47.4%. So if you look at it, what's the impact? So if you were at this stage, what will happen? You must be prepared also, okay? Because it will come back strong. You have to be prepared, right? Because this is all statistics. You can't go wrong. And it's only one quarter only. After that, any other lingering effects? Not much. It's just that one quarter to 2 quarters only. Okay, so this is an important statistic that I just want to prepare you guys for. Maybe it happened, maybe it won't, I don't know. But this is what happened in year 2003. So this highlighted part is the SARS period. Okay, so then I also zoom in again. Take note, during the 5 quarters of decline, 2.3%, after that, private property prices raised by how many percent? How many percent? 58%, ladies and gentlemen, not 5.8%. 58% increase after an epidemic. The epidemic was 2 quarters. After that, another 3 quarters here. Then things start to go up already. So for those who have bought properties just after the SARS period, just after, and holding it for 4.5 years, if you bought at 1 million, you can sell at 1.58 million. These are opportunities that you need to wait for. So please be very prepared for yourself, for your clients. So it's 5.8%, sorry, it's 5.8%, it's 58% a lot now. It's a lot. This is where opportunities are. So prepare for the recovery of opportunities. Today is only day 3. I know everybody is fearful. There's a lot of things that we don't know what's going to happen. But I know we will definitely tide over because statistics show whatever epidemic happened, it's all short-lived. Okay, it's not like it's going to be 10 years down the road. And there was also more downgrading from private property to the HDB market. So whenever there's a crisis, people don't dare to overspend, right? They want to spend lesser. They would probably buy all the suburban condos or maybe downgrade to the HDB market. So whenever there's crisis, this is going to happen. This is just to show you that whenever there's a crisis, government will step in to do something. So what did the government do now? You all know or not? Never mind, later I'm going to show you. Right? If you look at probability, how many percent you remember or not? 58%. If the property market continues to decline, they will tweak. We got 9 cooling measures, right or not? We can unwind 9. Right or not? Last time during the times I joined, you know how much was the down payment for property in, let's say, 10 years ago? 10%. Then after that, it became 20%. And then it became today 25%. If market is no good, maybe, I don't know, they may retract back. We're all not sure. But when they do it, I'm sure if you are still there, one la kopi beside your friend Hang Cheng Pai, you sure won't get opportunity. Right? You have to be the one on standby for things to happen. You must be on standby, okay? Overall, what happened was, I just want to share with you that the bulls usually outperform the bears. You all know what's the bulls? Huh? Bulls means what? Go up. Bear means what? Go down. So no matter how you look and no matter how I flip this chart, left, right, up, down, center, upside down, right? No matter how I flip, you will have 15 quarters of down, 19.6%. After that, you have 17 quarters of up, 58%. You have a crisis again, down 24%, 4 quarters, and then you increase again, another 62% after a crisis. Every time after a crisis, you make a lot of money. After the crisis, not during the crisis. After. Okay, after the crisis, so you have to be prepared. And also, even with no crisis, the government tried to have crisis. 9 cooling measures, but still not enough. There's still 13 quarters of increase more than the cooling measures, 12.3%. Also, this clearly states whatever happens to the property market will always get what? Higher. It only gets higher and higher. So if you understand and if you look through what is happening, whether is it today, tomorrow, or 1 month later, 1 year later, these statistics won't lie. They won't lie. You have to be prepared. You have to prepare your clients for that. So you see SARS period, how is it compared? 2.3% compared to the rest of the crisis and opportunities. Quite negligible, right now. So don't worry so much. If your client don't want to view, you say never mind, you view next month. Understand or not? Don't worry so much. Okay, it's just a knee-jerk reaction only. Okay, so things will continue to what? Improve after every crisis. So some of you might have forgotten there's actually the H1N1 virus in 2009, which is from May to August. How many months? May, June, July, August. Also 4 months. So you see an epidemic, how long usually it lasts. So this ended because there were vaccines in place. And just to let you know, real statistic, ladies and gentlemen, in Singapore, H1N1 virus affected 415 people. You also never 眨眼. H1N1 in Singapore affected 415,000 people affected. But it's not that serious. Only 1,348 people were hospitalized. I can use only, no? Can, right? Then today, corona, how many? 43. You all now buy toilet paper. Here also never buy. Also don't know what's happening, right? No? 415. But this strain was actually a influenza strain. Okay, so anyway, the death rate was pretty low based on 415, there were death rates of 18, and fatality is 0.1%. Okay, so that's why maybe people are not that, aware. Okay, so this was a chart by one of the public studies. Okay, just in summary, this was actually the SARS versus the H1N1. So SARS was in 2003, and then H1N1 was in 2009. Okay, SARS was part of the corona. H1N1 is just another influenza. Origin for SARS was in Hong Kong, and origin for H1N1 is from the US side. Okay, from the US side. And then in Singapore, SARS had 238 cases with 33 deaths, 14%, which is pretty high. And of course, the H1N1, based on hospitalized, is 1,003, but 400 over 1,000 people got the virus. Okay, so based on hospitalized, it was 1.3%. So this is the direct comparison for these two. And of course, based on medical, why was SARS scary is because the medical treatment was very limited for SARS. But for the H1N1, there were actually available vaccines today as well. So you all can actually have vaccines for that. So compared to corona, this is where we stand. You all decide for yourself. Okay, this is news by Singapore. Okay, news by Singapore. How fast it will grow, we also don't know. Or just monitor. Okay, so this is how I monitor the seriousness of an epidemic. Okay, this is just how you measure. Okay, so this is just a comparison. Next, this is the stock markets, just to show you what happens after 6 months of an epidemic. After 6 months. AIDS, I think until today also have lah. SARS. After 6 months, stock rallied by how many percent? 21%. 6 months only, 6 months stocks. If you look at whatever swine flu, down here. After 6 months, stock rallied by 39.9%. All these are after epidemics. If you look at everything else, I think more or less not bad, right? So if you have bought during all these periods, just hold a while, you will make some good money. Okay, and this will translate into confidence for the clients to buy property. So that's why we're always looking at the stock markets as a reference. Okay, as a reference. I'm not asking you to buy. You all got money, buy property. Okay, because 20%. Okay, let's put into perspective. 40% of 100,000 is how much? If you put 100,000 to the stock market, 40% means how much? 40,000. Okay. If you put the money in a property that's 1 million, 58% means how much? 580,000 profit. Okay, so what I'm trying to tell you is that buy property. So these are some of the lessons from the past. First, the outbreak of the SARS has actually created a lot of public anxiety, same like now. This is what is happening. And taken a heavy toll on businesses. Okay, businesses are definitely affected. Tourism is also affected. Hotel, restaurants, retail, airline, cruise, travel, taxis, so on and so forth. Impact on stocks were material, between 5 to 15%, but short-lived. Okay, the time period is very, very short only. Okay, between 3 months to 5 months. And then there were also lower transactions due to the knee-jerk reaction. Okay, lower transactions for at least 1 quarter. It has very limited impact on private property prices, which is only like 2.3% on average. Of course, price recovered for HDB, but it's still slightly slower than private property. Prepare for private property recovery opportunity. Must be prepared. Lastly, the bulls usually outperform the bears long term. So if you're a long-term investor, sink in your money, 5 years, 6 years, 8 years down the road, you will definitely make a profit.